All right, how's it going, everyone? I hope you're doing well. Welcome to another video. Today I'm going to be breaking down a trade that I took today. Like I said, I'm going to be doing these 2 or 3 times a week, just trade breakdowns or just breaking down concepts that I think are applicable to the current market conditions or just a lot of questions that I'm asked from people around me. And so this was a pretty decent trade. This is what I would call a mean reversion trade, which essentially we're just looking for something that is away from its mean, something that has an average price for a long period of time, and then it seems to be very far away from that and a little bit mispriced. And I'm looking to take that back near to that price in some type of way, not really near it, just that direction. And so you're betting against a trend, but it's very selective. Like, you see this chart and you think, okay, well, how do you do that? Because there's so many days here. Like, how do you know what day it is? And the funny thing is like I haven't tried to revert any of these days other than today. I didn't even look at this up until here, like probably this area when I started watching it. And even then, I just never really saw anything that was that interesting or seemed like out of the ordinary. And so this trade specifically is called an exhaustion gap. An exhaustion gap is just it's a way that a lot of trends can end. Okay, so if you have a long downtrend for a long time, and then it gets steeper and steeper, and then you see this big freaking move that's just huge, like at one gap down one day, that could mark the bottom, and then same for the top. And so that's what you're really looking for in these. They don't come that often on large caps like this, like SOXX, which is a semiconductor ETF. I believe it's like Nvidia, Micron, AMD, like all the big stuff. But these happen a lot in small caps, and they're a little less scalable on the small cap side, but this is an extremely liquid and scalable trade. And I just want to break that down. By no means did I invent this trade. This trade's been going down for probably hundreds of years. I actually learned this from like a couple mentors of mine throughout the years, and I've just noticed that every single good trader pretty much has this in their playbook in some type of way. Even if some are more selective or some trade these setups more often, I would say that most traders have this set up in their playbook. And so just starting out, what I look for with this, I'm scanning for daily charts that look like this. And what I mean by this, you're seeing something that had some type of fair price. As we can see, it was a choppy kind of range. And then it starts to break, and then it starts to trend. We're looking for strong trending stocks, whether we're looking to buy them or bet against them. We're looking for things that have a lot of range, that are above their 520, 50, 200 MAs, and that's what we're really looking for most of the time for this type of a setup. And so clearly, when you look at this chart versus, let's say, a Netflix, right? Like Netflix is just in this kind of choppy range. I don't really know what to do here, I mean, and that's a wise statement. Your job is really not trading; it's knowing when not to trade. And as long as you know what not to do, you'll make money. And so, with that being said, that's pretty much what I'm looking for whenever I'm scanning for these on a daily time frame. And I use StockFetcher as my scanner. It's fantastic. I have a code I input in there. I share that with everyone that I work with. And so that being said, this is an exhaustion gap. I look for strong trending stocks in the daily time frame, which is just explosive trend with multiple legs. And I'm also looking for an increasing slope. Okay, an increasing slope is going to be something that is steady to the upside, right, and just trending up, and then all of a sudden it starts to get steeper. The legs start to get bigger and steeper. Now this thing is going what we call parabolic. Whenever this happens, we know that it's likely to revert to the mean at some point. It's just a matter of understanding what type of nuances and confirmation you're looking for. And so the nuances and confirmations I was looking for with this specifically was I wanted to see multiple green days. I wanted to see a big gap up. And then I also wanted to see a day where the overall NASDAQ was overextended, where a lot of these tech companies actually are, this is what leads the market ultimately, right? And so, as we can see, like, we've been straight up for like 2 months, and then I would consider this a pretty overextended market right here. And, I don't call tops in the market. I'm not Michael Burry. But I do know that whenever an ETF like this, triples in price over this year, and then all of a sudden we get 1, 2, 3, 4, 5 green days, and then a pretty large gap up relative to these other gaps, I'm getting short, and I'm willing to take that bet 1,000 times. And so that's really the context and nuances I was thinking about. As much as I want to say there's perfect objective rules for these setups, there isn't for any in the market. There's a lot of nuances. There's a lot of understanding market conditions, the type of symbol that you're trading. You know, for example, an exhaustion gap on a small cap versus SOXX, at ETF, completely different trade, And so I just want you guys to understand that trading is really about the nuances. It's not as much about the pattern or perfection and everything like that. It's about understanding the nuances for each setup and applying them properly based on your experience and so forth. Hold on, I need water. And so that's really what I was looking for in terms of scanning and like a trend / slope perspective. And then when it comes to the actual confirmation itself, you know, I'm looking for multiple green days and then a relatively large gap up compared to the prior days or just prior gaps, right? So we see like there's a large gap here, there's a large gap here, and then we get a really large one right here after those consecutive green days, after we have multiple legs to the upside like this. To me, that is extremely probable for reversion. And so that's why I ended up getting short. And whenever I'm expecting these trades to happen, I have them on a watch list the night before, and I'm looking to actually trade them in the pre-market because most of the time these are just going to dump or take off if you're buying right at the open. And that's exactly what happened. So as you can see, like this literally opened up and just crashed. And that's typically what happens on the best setups. I want to make that clear. So, you know, you're better off getting positioned in the pre-market, no doubt. But if you were to look at my actual executions themselves, as you can see, I start getting short at 593, I believe. And then I literally just cover everything in that first washout because I really, you know, as much as I wanted to say, oh, you know, this was the top, yeah, I was acting like it, but I have a feeling it's still going to go higher the next couple weeks. So I wasn't like overly convicted to like really hold this. And I really probably could have held a little bit better, you know. Here's the prior close. I just took everything off into it. But these covers were a little early, which I don't like. My entry, obviously amazing. I top ticked the daily chart that I hadn't even touched for the whole time it's been running, right? Like that clearly tells you something's good. I mean, this thing's gone from, you know, 100 something in the last year all the way up to 580. I haven't touched it once, and then all of a sudden I literally shorted the top, right? Based on my rules, based on my system, and just the overall process I just explained to you guys. And then, as you can see, I cover everything into that first move down. Again, I think this was the right place to cover, just below this previous close, and then you can like try to add back like I did later, which I ended up covering. It was like a break-even trade, very small. But this was a pretty sizey trade for me, to say the least. And entry was amazing. Exit was a little early, but these exits were good. So there's not too much I would change there. But yeah, in terms of entry, it's not like I'm waiting for some magic confirmation. I'm literally just looking for that pre-market gap, and I'm looking to get short it. And like, I really don't want to see it go higher after the open. So I'm thinking, okay, if I get a big gap in the pre-market from the prior close, right? That's relatively large. As you can see, this is large compared to the prior days. You know, I'm looking to get short in that large area, which I kind of eyeball. As you can see, like, I'm just looking at the daily chart. I'm going, okay, this thing should open up here. That's kind of large. And then I'm hitting it short in the pre-market, and then I'm expecting this at the open. And that's exactly what I got. And so that's really it when it comes to entries and exits. And then I'm eyeballing entries or exits into the prior day high or the prior close, which you obviously saw in these images. And that's really it. You know, I wish there was more to explain here, and obviously there's a lot more nuances and depth. But so far, this is my best trade of the week, and I'm pretty happy with it. So I don't have too much to say. I think I could have obviously held a little bit better, like I mentioned, but outside of that, this is a fantastic trade. This is an exhaustion gap setup, mean reversion setup on an ETF. So again, very different than a small cap, very different than a currency, very different than even an individual stock, right? And I just want to make that very clear. There's nuances. You can look at the same pattern, the same setup, but if you don't understand the nuances and the type of instrument that you're trading, you're going to get in trouble. And so, yeah, if you want to learn more, feel free to check out my program. I literally have one person currently that I coach, and we just work together and talk through ideas each day. But that's where I obviously go more in depth on all this. And yeah, I mean, it's really genuinely fun for me. It's more of a passion project, if anything. But I also do enjoy getting on here and reviewing them verbally. It definitely helps me out in my own review process. And yeah, so even though this can seem kind of simple, it really is in the grand scheme of things. Like I said, my setups are simple, they're logical, they're not like smoke and mirrors, they're not like fairy dust, like there's no secret. The secret is just experience, doing them 1,000 times, well, more than that, and then applying the nuances individually, or that each individual setup offers, and then risking accordingly based on that. And I do that over and over and over again, which made me call the top, at least short-term top, right? Like this could be higher in however many days. However, I know that the EV, the expected value of this right here, the win rate of this happening on this particular day in this particular moment, when you know what you're doing, you top ticket and you get this. And yeah, I mean, my whole point with saying that is this could totally go higher, but this was a fantastic trade, and the probability in this moment was extremely high, and I was there for it. So I hope you guys enjoyed this video, and many more to come. This is definitely one of my favorite setups, and I can't wait to break down more of them. I've already break down a few on this channel. Like if you look at SLV from like I think 3 or 4 months ago, I mean, it was the exact same setup. I'll show you guys that real quick. It was this day right here. I ended up trading this. I missed the swing, but I ended up trading this, which was pretty good. And yeah, so I hope this video helped you guys understand the exhaustion gap setup a little bit more, and yeah, I'll see you guys in the next video. Thanks.